Good morning, everyone. Today is Thursday, June 20th, 2024, and we are planning to go up with the market. I'm going to tell you what we're going to do before we're going to do it so you know that we know what we're talking about. So right now we have a C retrace to the downside. I expect this price to drop through my box in my 5-minute chart. We're looking to enter anywhere between the range of 483.25 and 483.50. I expect this price to spike down, get below the 483.50, and then snap back, and we'll enter the trade at that point, looking for about a dollar run.
Order fill.
The reason why we took this trade was a wide state V pattern. Now we expect the price to go $1. After it moves $1, we will assess, lock in some profits at that point, but this has a very high probability this price will return back to the 200 moving average on our 1-minute chart. So here in just a bit, I'll mark up the charts, I'll go over what we saw, why we did what we did, but we want to focus on managing this trade at the moment. So here's the statistical probabilities that can happen. Price hits the dollar marker, gets on top of the 21 moving average on the 1-minute chart, curls over, supports the price continues. Price drops, second wave of participants come in, start buying, push our price to our dollar marker.
Horizontal line triggered on symbol QQQ.
And there's a $1 move. Now once the price gets above our $1 marker, we'll lock in about 60 to 70% of our gains at that point, and then we'll lock in the full dollar once the market moves about 484.75 or better. V pattern wide state, H pattern. V pattern wide state, H pattern. V pattern wide state, oscillator agreement. Now that we're past the 485 area, I'm going to lock in a guaranteed $1.50, and we're going to see if this price jumps over the 200 or fails.
Order fill.
And our stop just took us out, so we got a $1.50 on this run, ladies and gentlemen.